Good afternoon. This is Gloria Nelson with the TUG Group, and I'd like to welcome everyone this afternoon to today's presentation. And before we get started with our webinar today, I want to give a quick plug for TUG. As you settle in and get ready for the start of today's webinar, let me insert a brief little plug here to both our current members and any of those who represent organizations that have not yet joined our online community for in-board distribution software users. We've all heard the phrase, knowledge is power, and I can say with confidence that you'll be waking up tomorrow with a little bit more of both. TUG webinars, online forums, and member events facilitate the timely exchange of ideas and information to help you work smarter and with more confidence, and that is a powerful combination. If you're currently a member, it pays to get even more involved, and if you're not, please visit our website to discover why 2,300 heads are better than one to help you be the best at what you do. So without any further ado, it is my pleasure to welcome Grant Howard today, CEO and President of the Grant W. Howard Company, who's going to be presenting on COVID-19 impact, the shutdown, restart, and what happens next. So Grant, give me just a moment here. I am going to make you the presenter, and I'll let you know when I see your screen. And we have visual. Go ahead and take it away, Grant. Thank you.
All right. Thank you so much, Gloria. And just confirming, you're seeing the full screen and not the taskbar, correct?
We are seeing the full screen with a little next slide to the right. So it's absolutely fine. Go ahead and take it away.
All right. Yeah, we were having troubles with that. Well, hello, everyone. Happy summer to everyone. I appreciate TUG asking me to come in and talk a little bit today. Gary and I had talked, probably 3 or 4 weeks ago, and of course, talked a lot about the COVID-19 and everything going on. I've had a tremendous amount of phone calls and emails and all types of communication over the last 90 days from many, many companies, many people asking for advice, opinions, thoughts, so on and so forth of when we were coming into the shutdown, the restart we're starting to go through, what it's going to look like afterwards, and in particular back to, in this case, the inventory management, how the usage has shifted, the lead times are shifted. And so today, let's take some time and talk about that, the shutdown, the restart, and now what? An inventory management discussion. Now, I got a couple things not working here in my office today. Is that moving for you, Gloria? There we go. So today, let's take a look at the big picture. And I always, many of you have heard me before, top to bottom, end to end. Top to bottom, meaning it has to start with the upper management and work all the way down to the firing line. These things that we're going to implement and talk about. End to end is talking about we procure, we warehouse, we value add services, and we sell. That's what we do as a distributor. And therefore, we're also saying end to end. There's things that are going to have to take place and be updated and changed in the replenishment world, in your warehouse world, how you're doing it, in your value add and services, and of course, how you're approaching the sales and marketing world. So again, top to bottom, from the top of your corporation company down to the newest hiree that you brought in, end to end, from the procurement of bringing inventory in to the other side where it's going out the door to your customer. All right. Then we're going to talk about the inventory management and replenishment, of course. That'll be the main course of today. And then the new norm. When will it come? What is it going to be? Starting to get ready for it. And again, when it comes down to it, many of you have heard me, we talk about 4 company objectives that apply to all of us. Now, many of you have heard me talk about 3. I'll sometimes introduce the 4th one, depending where I'm at, who I'm talking with. Today, in today's world, the 4th one comes home even more. Of course, we have to make sure profitability is staying intact and how we preserve it. The longevity of our company. Is there growth capabilities? Because good times create good times, and difficult bad times can create bad times for some, but also a lot of opportunities, which we've seen already taking place. So the growth, and of course, this last one, responsibility. And let me just go off on that. I present all over in Europe, in Canada, here in North America, and you see this change, this shift. If from over in Europe, responsibility is right part of their dashboard. It's up there. What's their carbon footprint? How happy are their employees? So on and so forth. You come to the States and they're going, huh? What are you talking about? Canada, a little bit in between. Today, with everything going on, responsibility is going to definitely be on every company's radar screen. Now, we've talked about responsibility in the past as social responsibility, economic responsibility, environmental responsibility, and of course, employee and people responsibility. And with the COVID-19 and the safety and us trying to get restarted, responsibility will be there. So trying to put all this back together, those four pieces of the puzzle that kind of fell on the floor for a lot of us for the last 30, 60, 90 days, we're picking them back up, and how do we put it back together? So again, profitability, longevity, growth, and responsibility. The big picture, I'm just waiting my screen. I don't know why it's rolling so slowly here today. Changing for the unknown. That's what we're coming into. And again, something I like to do a lot of, giving away a little bit of age, history, but most of us, 2008 is close enough that we remember it or we've heard people talk about it. And then just in case you weren't around in 2008 in this world, it was called the Great Recession, whereas back in the 1920s, we had the Great Depression. In 2008, August, we had the start of what we called the Great Recession. And during that, there's some things to take home. Customer usage decrease and instability. That happened in 2008. Customer committed increases. Vendor lead time increases and fluctuations. Vendor back order increase. Employee stress and uncertainty. And the way a lot of companies approached this in 2009 or 8, 9, and 10, of course, they came in and they slashed their inventory. They tightened up AR, and they let go of a lot of people. The economy back in 2008 overall dropped about 2%. And that's still a surprising number to many people when they hear it, because if they lived through it, they're going, wow, we thought the economy changed much more than that. Our company was much different than that. The economy only shrank 2%. But yet, there were companies out there that were down 20, 30, 40% even on their top line revenue. At the same time, there were companies out there that were up 30, 40, 50% during the same exact times. And what are we talking about? They didn't go out and slash inventory. They went in and managed inventory much smarter, got rid of the things they didn't need, made sure they had the things they did need. They invested in good customers and AR. We saw companies back in 2008 even taking good, decent customers and tightening up their AR and driving business away. And back in 2008, a lot of people got let go. A lot of companies also came back, or a handful came back and invested in their people, invested in the inventory, invested in the AR. And they actually had pickup while everyone else, if there was only a 2% drop and your company was dropping 30 to 40%, those customers were going somewhere. There was out there becoming distributors of choice, and all we were doing when we slashed the inventory, AR, and the people was drove customers away into competitors' hands. So today, we can take that. Now, here's one thing that's a little different. We've got to make sure and put this out there. I'm coining or defining uncertainty versus unknown. Uncertainty, we've heard a lot of it, but uncertainty back in during recessions and depressions, we still have a certain amount of backlog and history that tells us we don't know exactly when we're going to come out of it, but we're going to come out of it. At least we always have in the past. So that uncertainty in 2008 is definitely here, but the new element here is this unknown. We've never dealt with anything like this in our lifetimes. All right, it's been out there before. If you talk to your parents or grandparents, we've gone through similar things, but we've approached it much differently this time because, again, of the way we get around the world, diseases can get around much quicker than in the past. So we've approached it much differently, and it's created this big unknown to go with the uncertainty. When is this going to end? And you even hear some people saying, it's not a pandemic, it's an endemic. And I didn't really understand what that was. And they went back to the 80s and talked about AIDS, that they realized AIDS would never go away. It would be something that we had to live with, and it got changed from a pandemic to an endemic, i.e. it won't end. Now, we all hope this will end. We all hope we get a vaccine. We all hope that something changes this and we get back to some type of normal. But at the same time, we're all seeing it's not quite going the 30 days, let's close down like we originally thought. We're 90 days in. There's some reopenings, but there's also some resurgence going on. So it's, again, an unknown territory that we're in besides the uncertainty. That's where we are. So how do we take this and do something with it? And again, where I want to fall back to here is you've got to be really careful, because a lot of companies are calling me for that. Grant, when is it going to stop? Grant, how much will our usage change? Grant, and they're asking me all these questions. I'm like, when you figure out that answer, let me know, because we'll retire together on our Caribbean island. And where I'm going is you can't get out the crystal ball and use that type of oil. You've got to come in and use history, have to use data, have to use risk management, and have to decide what your objectives are going to be during these times and when we come out of it, because this is definitely going to shake up a lot of companies. As in 2008, we saw quite a few companies go away. We will see a lot of companies go away in here. It's going to clean up a tremendous amount of companies, and any companies that stick around, they're going to run differently. They're going to run much cleaner than they did before. They're going to have much better safety. Be careful with the crystal ball. If anyone tells you, because I see it, I see these emails coming out and these webinars, oh, it's going to end in September, we'll be back. It's going to end in November. I'm not saying it's not, but I wouldn't put all of my baskets in that cart today, or all of my eggs in that basket. All right, so now let's take that, and what do we know? Back to the known. That's timeless. Whether it's this year, whether it's 12 years ago, whether it's 50 years ago, there are certain things that we know that happen and how they happen. So we have to go back and say, there are some things we don't know. Let's do our best estimations on them. Let's build a plan around them, but let's also use what we know and to come back and do a better job. And where I'm going to go with that right now is there are companies out there right now doing like in 2008. They're investing smartly in the right inventory. They're investing in their customers' AR and communication with them. And they're investing in their employees and their people, offering them better what I call PET, P-E-T, processes, education, and better tools and technology to do the job. So we know to come back and build off of that. Those who learn to navigate through this now that we're in will be the leaders now, and when we come out of it, they will be the leaders then. We saw back in 2011 and 12 and 13 as we came out of the recession, and what companies had done the last 3 or 4 years set the precedence of who and what they were going to be looked at when they came out of it. Oh, they're the ones that were so concerned with profitability, we always ran out of stock and never had what we needed. Oh, those are the ones that stood by us and had the inventory, even though we weren't sure. They invested in it. Where did those customers go back to? It's not too hard. Learn to do the navigation now from what we know. So now, profitability, longevity, growth, responsibility. This is where it's at. How do we keep good longevity? That's our customers, our employees, our vendors. And I purposely didn't change this slide. I have a few slides that I like to use in most of my presentations for setup or wrap up, and this is one of them. And at the bottom of longevity, relationship still counts. Relationship counts more than ever with your employees, your customers, and your vendors and suppliers today. Profitability, talking about the return on the bottom, yes, it's there, but we're in a day where we better be smart about how we're optimizing our profitability at whose expense. We can still be very profitable, but things are going to be looked at differently. Growth. There are growth opportunities out there. Again, right now, the best numbers that I'm hearing is, and again, this is an unknown time, unknown unemployment. There's all types of things, propped up people with the PPP program at companies which may go away. But what we do know is there's growth opportunities out there for companies. This economy at this point has shrunk about 5%. Now, this one's different because it's not a true recession where it's just down. There are certain areas that are down, and there are certain areas that support COVID-19 or the frontline people. My wife's a nurse, and we all know it. Masks, sanitize, there's certain things. They're booming. And when I talk with a lot of companies, it's been very mixed the last 90 days. I have some companies that are down 10, 15, 20%. a lot of companies that are flat, and a lot of companies that have changed their mix or happen to be in the safety world, and they're up 20, 30, 40% year to date over last year. So again, it's out there, but planned and supported growth. And again, this one on the right, responsibility. If that hasn't been in your world, if that hasn't been talked about at the top level of your company, it will be. All right, there's no changing that today. There's social, economic, environmental, and employee. Respect, loyalty, we're all in this together. And again, you have to get out there and look at these. They're not just to talk about. Are you measuring? Are you looking at where it's up and down? Do you have some type of good dashboard or gauge so that you're not caught by surprise? A lot of the people on this line in 2009 and 10, even though we went through a recession in August of 2008, they were still caught by surprise on many things because they weren't out there measuring. They weren't out there monitoring things. They didn't have good systems in place. So now let's just make sure and bring that home. I'm going to break it down to just customer experience and profitability because that's the two big ones. Growth will come. You'll make it if you're flat. You'll make it if you have a little decline. The key right now is keeping your customers intact, keeping your customers happy, and trying to preserve as much profitability as you can. So again, there's going to be no change here. They still want good fill rate. You still want that from your suppliers. We're going to struggle with it. There's going to be some times when we don't have it. What's one thing different now than before? People are much more accepting. They may not like the answer. They may not like that you don't have it. But if you're putting in the effort and no one has it, they're going to be more accepting than they have in the past. But don't take advantage of that and push it too hard. They want a good fill rate. They want on-time delivery. And they still want their orders entered accurately, picked accurately, shipped accurately, and priced accurately. They're still looking for the perfect order. Of course, if there is an issue, they want a good issue resolution process so they can get a hold of someone at your company and get it resolved at a fair price. Of course, the profitability side, trying to preserve and grow revenue, trying to watch cost of goods sold, and preserve our gross margin. But now in the inventory world, particularly across your company, we procure, we warehouse, we value add, and we sell. But these are the three things that take all of our gross margin away before we get net profit. Some type of logistics. Remember, we move inventory. So we have inbound freight, we have intercompany freight, and we have outbound freight. We move inventory around. We have transactions. We have POs to bring inventory in. We have transfers to move inventory around. We have work orders or assembly orders or whatever you call them within your organization to take something and assemble it into a kit or value add to it. And we have assets. Our two big ones, inventory and AR. Of course, we've got trucks, building capital. But again, in the inventory world, we've got to watch our inbound freight and our intercompany freight because it's going to go up if we're not careful. We're going to have to watch our transactional, in particular, our cost of POs and transfers. If we're not careful, we're going to get into very firefighter mode. We're going to forget all the best practices we know, and we're going to eat ourselves up transactionally. We're going to eat ourselves up freight. And, of course, the inventory, we're going to have to be careful. Again, we're going to want to bring inventory in to keep our customers, but we've got to be smart about it. But again, on the left side, keeping our customers happy, and on the right side, of course, preserving revenue and keeping cost of goods sold down, but watching our freight, watching our transactional costs, and watching our asset build up. And again, the key here is we're balanced. If we're not careful, we'll be one of those companies that slashes inventory, slashes AR, and slashes people. Our profitability will look good temporarily as our customers erode away and none of them come back, and as we go away and we're not a company out there anymore in 1, 2, 3 years, like happened in 2008, like happened in 2000, like happened in 1988. We've learned these lessons enough times. Keep these in balance. Don't forget about the customer experience side as you're trying to maintain your profitability. If you don't have any customers, you will not be profitable. So let's take a quick look at a strategic, because we have to have a big picture. This is no longer going to the purchasing department and saying, oh, we're down 10%, go slash usage by 10% and business as usual. This is bigger than all of us. And this has to start at the top of your companies of saying, How are we going to approach this new world that we live in? And the first thing, and it's up there, you've got to change the plans. There's going to be a change of plans. It is not the same as it was 90 days ago. And most likely, even if we come back to a normal that we all think is normal, that's 2 to 3 to 4 years away. I'm talking normal. After 2008's recession, which is nothing like this, it took almost 3.5 years for it to come back to what we would call normal. So again, the very first thing in your strategic safety policies and procedures for your employees, for your customers, for your suppliers has to be in place today. Then we've got to review and adjust our company objectives, the profitability, longevity, growth, and responsibility for short-term needs. Now, short-term is going to change. If you're a stock market player, short-term's always been the next month, the next quarter. It's a little bit different. We have to change our objectives for our short-term needs, meaning how do we survive through this? How do we set up a situation to go from a survivor to a thriver? But at the same time, don't get such greedy short-term needs in there that it hurts us long-term. Then we have to have long-term stability. There's going to be some instability. There's going to be a logistical supply chain disrupted, and it's going to keep getting disrupted, and it's going to keep getting clogged up. It's got to come back. So again, we have to think about this long-term stability as well. And of course, you hear me enough times, we've got to have good measurement tools in place and measure, or you won't know where you're at. We've got to implement a revenue and profit preservation, growth and optimization strategy. How do we keep the revenue we've got? How do we minimize the loss? Where do we find other areas to bring into our company? How do we go out and optimize it? Then we've got to meet with all employees, all right? And I'm already seeing this becoming, we don't have to get with it. No, this is a different time. Companies are going to look at your company. How did you treat your employees during this? How did you treat your customers? How did you treat your vendors? And it's going to be looked at. So you've got to meet with all employees and review the safety and how you're going to change your market approach, how the revised objectives affect them, and giving them new PET processes, education, and tools to work in our new world, and continue to build we're together strong relationship. So critical. We're there for you. We've got to meet with key customers and review these usage shifts. Now again, they're going to look at you and go, you don't know and I don't know. Ask. You don't know. They will still have usually a better idea, a better indicator than we have. They're one notch closer to their market, so therefore they're one notch closer to what the actual shifts may be. It may still be a little bit of waggy, wild-ass guess. It may be a little bit of swaggy, scientific, wild-ass guess, or they may be able to get even a little better than that for you, but get out there and work with your customers, your key customers, for usage shifts, and what are their needs? What can you now bring to the table? Add to your mix to help your customer for them to go, wow, this is the distributor of choice I want to be with. And of course, building that we're together relationship. And of course, meeting with your key suppliers. All right, there are going to be supply chain shifts, and you've got to talk about that. Try to get that relationship, because there's going to become a time where 1,000 of these are going to be wanted by 5 different distributors, and they're going to ship it to one. Who's going to get the product? Relationships are going to play a part of this, as they have in the past. And then we've learned this from 2008, 9, 10, and this one's probably even stronger. More important, I wouldn't wait too long. Start establishing possible alternate sources for mission-critical products with a high probability of supply chain interruptions. There's a lot there, but there's not. You know your mission-critical products, and you know things that are vendors that have had troubles in the past. If they've had troubles in the past, I've got one particular distributor I work with a lot, and they've got one supplier who's notoriously had trouble the last 5 years. And if we're sitting here thinking, oh, they're going to get better, dream on. We're starting to find alternate sources for that supplier already, because there's a very good chance they're either going to suffer tremendously or won't even be around in 12 months. So again, look for your high probability of supply chain interruptions for mission critical and start sourcing. What's the big one out of this strategic? There's a lot here, but the world has gone over to, can we create a safe working environment, whether it's at their home, whether it's coming into your place, this communication is going to take on, this curbside pickup, these deliveries. How is it going to come together to be safe for your customers, safe for your employees, and safe for your suppliers? I'm just waiting for my screen to catch up. Sorry. So let's dive in now to the inventory management and the replenishment side. And again, I'm going to emphasize top to bottom. This is not a time to say, oh, purchasing, go revamp the demands a little bit and adjust the lead times and keep going. There's going to have to be upper management involved to say, how much are we going to invest or de-invest? What are we going to do with the inventory? What are we going to do with the incentives? What are we going to do with the shortages? And end to end, your warehouse is going to change. Your receiving is going to change. Your accounts payable going to change. We have to take all of this into account as we build through this. So let's just make sure we understand the replenishment system. The when, what, and how much. That's what it's all about. When do I need to replenish so I don't run out? How much do I need to replenish? And the how much, again, is geared around keeping profitability maximized. What's not needed? What do we have that we don't need? It addresses the objectives of customer service and profitability. So again, usage during lead time plus safety creates what we call the order point or min when it's time to replenish. With that being said, right there, when we need to replenish keeps us from running out of stock. Our usage has shifted. Our lead times have shifted. Our safety is going to have to shift, and we'll come back and discuss those. But our order point is going to need some attention, the components of it. When to replenish, and that's our fill rate. Then we have our order cycle and our EOQ. This is how much we replenish at a time. Our usage during the order cycle. Things are going to change. If you're down 30%, you're not going to make the targets the same amount of time you used to. And if you've got locked-in order cycles, like many companies do, those order cycles will no longer meet that target. So we've got to go back and look at order cycles. We've got to get back and look at EOQ. Are we bringing in more because we know there's going to be a shortage? Is cash flow tight? We got to bring in less. All of these are parameters that can be adjusted. Let your system do the work after you come up with a good strategic and then tactical approach of how we're going to hit this. Remember, how much we order, how much we replenish helps minimize the freight, cost to carry, and cost to purchase. And again, we won't get into this, but if you have some target that you're trying to hit and you beef the PO way up to get it, you're bringing in extra inventory. You're going to pay extra cost to carry. So how much we bring in, when we're doing that, we have to be out there minimizing freight, cost to carry, and cost to purchase. Not one of them, all of them. These should be able to be measured within your company and keeping track that we're not going astray. Oh, yeah, we kept the inventory down, but we're placing 5 POs a day, Grant, for the same vendor. We're paying freight on all of them, Grant, and receiving is getting on its knees. We only have a third of our receivers out there. Transactionally, you're going to kill yourself, even though you saved somewhere else. You've got to keep this in balance. And then, of course, you've got the surplus inventory. And again, if any time was a better time to work surplus, it's now. At the same time, it's one of the most difficult times because people don't want to give back money right now. But there's ways to do that. And I'll hint out on it right now. Trading 1-for-1, 2-to-1 with your supplier, sending back things you don't need, but taking back things you do need that were going to be on tomorrow's PO anyway is a way to get rid of. And it's been very successful up to this. We've had good success with it the last 60 days. Most suppliers don't want to give you a credit memo. But if you tell them you're sending product back and you'll take product back, you will get much better luck with it, much more success. And, of course, you have the P&A, the purchase net available. What's this come down to? Back to basics. Lower left hand. We have to have decent usage. We have to have a decent lead time. We have to apply the right safety stocks for what we're trying to accomplish, and all that has changed the last 90 days. Our order cycles and EOQs will need adjusting. That has all changed over the last 90 days. Purchase net available, we saw this. What's going to happen? Purchase net available is your on-hand minus your committed to orders and transfers and work orders plus your incoming from transfers, work orders, and POs. We are most likely going to see committed jump up tremendously. We saw it in 2008-9. About 10% traditionally of our inventory was committed to customers at any given time pre-2008. As we slashed inventory and cut people and didn't have the inventory our customers needed, they started realizing this and giving us orders they didn't plan on taking right away, but they were able to reserve the stock. That's going to take place again, so watch the buildup on committed. And, of course, we're going to have back orders build up with suppliers. We're going to have lead times go out, but back orders and extended back orders. And here's where I'm going with that. If you don't stay on your dates and your extended back orders that are being put out there by your suppliers, your system's going to come up and say, don't need to worry about it. You've got plenty incoming. Even though it's been a back order out there for 6 months and we're not following up on it, your system's saying nothing to you because it thinks it's in the pipeline. So dates along with these and expediting on late POs, expediting and talking with customers that said they want it this month and then they said to wait. You've got to keep a good hand on this or your P&A will get out of line. You'll have a lot of back orders not coming in from your vendors, and you'll have a lot of committed. Of course, we have to work surplus and what's not needed. So again, customers, employees, vendors, be aware. And this is for us to be aware of some of these things. There's change coming. And again, we know this. Usage will shift and become much more fluctuant from our customers. Committed will increase, trying to create a buffer from your customers, and all of a sudden their returns. You're going to have customers that haven't returned for years trying to get their cash flow back in line, trying to survive. They're going to go clean their warehouse, and they're going to send stuff they bought from you 10 years ago. They're going to try to return things they bought yesterday, and they're going to try to return things they don't know where they got it back into your inventory. So it's going to increase. Watch it and be careful, all right? And make sure you're taking back, again, what was yours, what your responsibility. Now, back previous years, some distributors would take things back regardless of where the customers. You have to decide how deep that customer experience and service is going to be that you're going to offer to them. Employees, there's going to be a workplace safety issue that's going to create a concern and a distraction. It's out there now. We know this. So we have to bring in safety in our organization. Otherwise, even though our employees are there, they won't be there with us. All right, so creating a safe place to work, and then these changes that we're getting ready to put out, new policies, new procedures, new objectives, new way of doing business, a memo's not going to work. I've already hit a company, oh, Grant, don't worry. We had an hour board meeting. We talked about it all. We put together a memo, and we sent it out to all the employees. We're all set. That is not going to work for you. As you change your inventory management, your warehouse, your selling practices, you're going to have to invest in processes, education, and technology, in total quality management, and lean thinking. You're going to need to invest in your employees and invest in your companies. And this is the one that brings it home. Statistically, 98% of employees want to do a good job, yet only about 60% do. That 38% gap is because we're not giving them the tools and the toolbox. We're not giving them the processes, the education, and the technology to do the job. And, of course, vendors, there's going to be extended and fluctuant lead times. We're going to have an increase in back orders and extended back orders. Now, again, two different things. The long lead times, it may just go from a traditional 14-day lead time to a 28 and stabilize. It's just taking longer to get it. Extended back orders is a different. They're not going to get it to you, and it keeps going out and going out and going out. We're going to see that. And most likely, like we've seen, we've already started to see some of this. We're going to see some inflation. We're going to see price increases coming through. So keep that in mind as you're out there buying. What prices, ask them when the price increase. You may want to buy ahead a little bit due to price increasing coming if you have the cash or cash flow available. Be aware, be prepared. This is nothing new. We are quite confident, 99.9999% sure, all of these 9 things on here are taking place and will continue to take place, and you don't need to be surprised by it. Waiting for my next screen. Shifting usage, changing markets, and supply chain interruptions. Now, what this is a revised email. Right at the beginning, I had companies contact me, Grant, what should we do? So I put together an email I started sending out to people and, again, cleaned it up a little bit. But here's the down in the detail. Usage is going to be key. Everything in the replenishment system starts with good usage. Usage comes from the past but has to represent the future. That's very important to remember. So As the usage goes down, we need to possibly adjust other usage buckets to reflect that. When usage starts going back up, but the past usage we're using was down, we're going to have to come in and adjust that. Already have talked with many companies. Some of them are manually adjusting. Some of them have had a program or a script of some type written, and they can go in and up and down these usages. Be careful for seasonal items, because again, if we're only cleaning up 3 or 4 months worth of usage, seasonal items go back a year and look forward to calculate trends and to calculate the base usage. So if you're in a seasonal type company, you have to keep a much larger window of your usage buckets lined up with what is happening going forward, not what happened in the past. All right? And then, of course, we're going to have lead time issues. All right? Lead time will be extended and start to slow down. Take that into account. Many companies are out there. I've already helped many of them where if they had 7 to 10 day lead times, they've already gone up to 14 to 20 days. They've seen it happening out from their suppliers. They know what's going to happen. They've gotten into their system, and they've started adjusting the lead times as well to reflect reality. Safety stock. Depending on how well you think you can predict your usage and how well you're predicting the lead time will apply how much safety. Remember safety stocks for how fluctuant the usage and lead time are. In all of our lifetimes, probably more fluctuant than it's ever been that any of us can remember. So that would say to get the same customer experience that we were looking for before in today's world with much more fluctuant usage and lead time and much less predictable usage and lead time, safety levels will have to change. All right. Now, you've got to put into that your risk. How much are you willing to invest into this? Where do you think the economy's going? And how quickly you want to come back? At some point, the economy is going to come back, and where will you be in that mix? So safety stock has to come into play, and a lot of you will be out there. Now, again, a lot of you. What's typically probably going to happen? 80% of you are going to slash inventory, slash AR, and let a bunch of people go. 20% of you are going to come in and invest smartly into inventory, invest into your customer experience, invest in your people, and even though the world economy may be down, those companies will not. The sales are still taking place. The world is still moving. So again, order review transfer cycle, that's going to change a little bit, but if you keep your usages correct, everything's fed off of that. So again, if you go and correct your usages, reforecast your order cycles, they'll be correct. You're going to hit some vendors where you can no longer hit target as easily as you did before. Negotiate for lower targets. We see this going on. Vendors have come along with us. They're part of the We're Together movement. So we're seeing targets being lowered. We're seeing multi-drops or free fill-ins. And a multi-drop is vendors offering now you can cut me 3 different POs for 3 different branches. I'll consider it one towards target, still pay the freighter, still give you the discount, and we will drop it in 3 different locations for you. Be careful with freight. It will eat your bottom line up in these times. And of course, EOQ, economic order quantity, if you keep your usage correct, it's going to be correct because it's usage in the EOQ. Now, there are a couple fences in there. There's a min and max fence, whether you're on A+, whether you're on fax, whether you're on SX, whether you're on others, I don't know, shims, any shims users, any still part of TUG, but there's fences in there. Normally, never buy less than 1 week, and normally for transfers, don't buy more than 13 weeks, and for purchasing, don't buy more than 6 months supply or 26 weeks. Some of you are going to come and lower those and tighten those fences up because of cash restrictions, and that's fair. And some of you are actually going to expand some of those out and said, if the inventory becomes available, we're going to get it if it's mission critical and not too pricey, because in 3 months, we may not see it again for another 6 months. So some of you will actually be out there, and I've helped a number of companies do this. We've raised our EOQ max fence from 26 weeks all the way up to a year on certain product lines that are critical. And got to watch the purchase net available for the customer committed and vendor buildup. All right, as the supply chain slows down and gets clogged up, because it's going to happen and it's going on now, and manufacturers trying to get restarted because a lot of them shut down. If the cash is available, try to go buy a little extra ahead of time, because if you wait, you may not get it for an extended period of time. There is change ahead, everyone, and how we approach the world is changing. this is across the whole supply chain. This is from right where they pull the raw materials out of the earth all the way to the end user. That complete supply chain has been interrupted from beginning to end worldwide, creating uncertainty and unknown. But again, go back to what we do know. Use best practices, use good procedures, use measurement. And again, just to bring a few of these because of the demand and the lead time, that's where everything is. So just to bring those home, remember, what's your usage going to look like coming into this? And everyone's going, well, that was 2 months ago. We're starting to get a surge again. Things may change. We may have already come into it, and we may be coming into it again. I don't know what's going to go on there. But the concept is usage needs to line up with where we're at today. So when we're coming into it, during it, and when we're coming back out and it starts to grow and go again. Seasonal items, be careful. You need much more usage months to be correct. I have many companies changing their forecast method. Seasonality is hard, and they've had items before which were somewhat seasonal, but didn't have to be, but they ran them as seasonal. I see a lot of companies coming back now and saying, we don't really have to run seasonal on these items. It worked a little better, but there's so much history to maintain, they've converted them to non-seasonal, be backwards type item. The other thing that we've seen is tightening up our window. Usually we take a 3-month average on A's, a 4-month on B's to create the usage. Some companies are tightening those up so they don't have to maintain as much usage. And the smaller your window is, the much more reactive it is to what's going on right now rather than 3 months ago. Forecast method and window size. Seasonal items, there's also a min and max trend in there. As we're coming into it, you might want to lower it down, but when we're coming out of it or during it, you're going to see things starting to pop up, and it's going to want to trend more than you're allowing it. You're going to have to watch your trend min and max and watch the trend exception report closely. And then also the last one for usage, if you're utilizing any type of exception reports for usage, low usage or high usage, again, this usage is shifting. It dropped way down for a lot of us. It came back to a little bit of stabilization. For some of us, it went way up. You're going to have to get it and possibly change some of those fences for those exceptions to make sure you're getting the right things coming out and saying, oh, we have had a usage exception. So you're going to have to open the windows up. What it comes down to is this. The top picture, there's a lot of data in our system right now from the past that does not represent today or the future. It will not work for you. It's going to have to be tossed out, cleansed, revamped, and pushed back in. That's the one on the bottom. So you're going to have to take a lot of this data, rework it from what, again, upper management says is going to happen, what their predictions are, and how they want to approach the market and cleanse it. Sorry, guys. So again, usage is the cornerstone. It all starts with good usage. It comes from the past but needs to represent the future. So again, past, present, future. Keep that in line for your usage, the most important component. Lead times, of course, are going to lead times. There we go. Lead time buckets are also going to be incorrect, so we're going to have to correct them. You've got a bunch of lead time buckets out there for the last receipt that says we get this in 7 days, 7 days, 7 days. It's now taking 14 days. But those usages or those lead time data parameters are still in there feeding into your system. So you got to get out and say 7 days is no longer valid. We need to wash those out and get rid of them. On vendor lead times, you will have vendors that ship in 10, 10, and then 21 days. 10, 10, 21 days. People ask, how do we handle that? Normal worst case. If you don't know if it's going to be the 10 or 21, you've got to, in a customer experience world, you've got to use the normal worst case. Then we don't know what's going to come in 10 or 21 days. We're going to use 21 days. Our lead time min and max fences are going to need to be adjusted. There's fences out there that says if we ever calculate a lead time greater than X, move it back down. Most time domestic, 30 days, import, 90 to 120 days. We are going to see those lead times go out. You're going to have to raise your maximum fence. Lead time exceptions, same thing. You're going to have a tremendous amount of exceptions. You may want to open up your exception parameter for lead time exceptions a little bit so you're not getting as many and letting those new longer lead times get in there, not being marked exceptional. And be sure to use the lead time exceptions report. And the key is that one comes out of all of our systems every day from yesterday's receiving. There's no reason a month later to realize a lead time from a PO a month ago had shifted. That's coming out every day. Get in there and work your lead time exceptions daily so you don't get the surprises as these lead times begin to extend out. Same thing as before. We've got some bad data we need to get rid of and some good data to bring back in. Lead times will become more fluctuant and unreliable. Be realistic. I saw this back in 2008, 9, 10, 11, 12. Well, they did go out to 12 or 15 days. They've been at 7, but I called them and they said, "Oh, they'll come back. It'll be okay." And so they left the 7 days. And again, get the real lead time in there. If it's 15 days, get it 15. You can put it back to 7. Get realistic lead times. Vamp into your thinking what your supplier's telling you and make sure and keep good usages and good lead times in your system. So again, order point, line point, EOQ, purchase net available. We're down in the tactical. This is where it's all done. Let your system do the work, because a lot of you are already back to this. Man, we're cutting POs by hand. The usage is bad. The lead time's bad. The safety's bad. Therefore, the order point's bad. Our order cycle's not right in our EOQ because the usage isn't right, Grant. So we're back to manually human looking at this stuff. That's crazy. You won't make it. Come in and fix the usage and the lead time and get your order point, line point, EOQ correct. All right? Remember, order point is when we replenish, and that drives our customer experience. Companies are updating the usage buckets, the method, the lead times, and increasing safety or utilizing the day safety. As usages drop down, sometimes and lead times change. Percentages may fall apart. Some companies have come in and just said, "I want at least 30 days worth of safety," traditionally 7. 30 days worth of safety on my A items. 60 days of safety on my B items. 90 days of safety on my C and D items. Now, some of you are sitting back there going, "Wow, this isn't what we did. We came in and did just the opposite, Grant." That's okay if that's your choice, but these companies that are investing in correcting the usage, correcting the lead time, putting the right safety on, they're happy what you're doing, because all you're doing is opening the door for your customers to come over and visit them. And once they come in and visit them, you will not get them back. Now, again, we have to take into account cash availability, cash flow, profitability. That's all going to play in there. But within that, let profitability go a little bit for survival and long-term and longevity. Companies are raising their order points to replenish sooner. Line point and EOQ, which is how much we replenish, which minimizes freight, cost to carry, and cost to purchase. Companies are adjusting the targets. They're negotiating with suppliers and getting smaller targets. They're adjusting their order cycles, and they're changing the min-max fences on the EOQ. They're raising the line point and EOQ and buying more, not less, during unknown times, so they don't get caught. So they are going to become the distributor of choice. I didn't put this in there anywhere, but it's coming to my mind. Money is cheap right now. We're at an all-time low. You can invest and take a loan, and you're investing in the longevity of your company. The purchase net available. Process education technology across the company, keeping orders clean, keeping POs clean and up to date, keeping transfers clean, and of course, always be on hand. But watch the vendor incoming dates and back orders closely. Watch the customer's committed inventory build up closely. These are things from past experience. Working hard or working smart. A lot of you are working really, really hard to pull this off. If you're in the purchasing world, you're doing a lot of manualness that you used to not do, a lot of looking at numbers. Go back and get back to basics. Update your usage, update your lead time, update your safeties. You might have to do it again next month. Things are shifting, but let your system do the work for you. So are you working hard or are you working smart? Few watch outs, lessons from the past. Have, suppliers, manufacturing, transportation, and working from home. This is all at the same time. We haven't had this in the past. All across the whole supply chain. And this is at the bottom too, but that's build a process to manage and manage the process. A lot of you have known me for many years. I'm a systematic, proactive approach type person. If you don't have a process in place, you can't manage it. Now, a lot of you have processes in place that just need to be changed. Some of you, this is an opportunity. Business is down a little bit, but we still have our employees. federal government gave us some money, we're going to go in and build processes to manage the process. Buy early in larger quantities if possible. Utilize central warehouse locations. I've got a company on the East Coast I talked to last week, multiple locations. They don't know where this product's going to be used, but they're buying up right now. They're buying as much as they can, and they're putting it in their central warehouses and central locations to distribute out later as the branches need it. So they're not sending it to all the branches because they're not sure where it's going to be needed. Negotiate vendor targets and multi-drops for targets. Work closely with the customer suppliers. Relationships count more than ever. And it looks like, even though we're hoping 30 days, 60 days. Oh, my kids, June, well, if everyone doesn't know, I'm in Michigan, so we've been on the news a lot. I've got a sister in Europe. She goes, Michigan's been on the international news with our governor and the extreme hard lockdown that we had. But where I'm going with that is 2 weeks ago, the lockdown got lifted. The kids said, oh, it's over. Life back to normal. No, it's not. We're still wearing masks. We're still scared to go to the grocery store. It's out there resurging and coming around. So it looks like it will be here for a while. This may be, people keep saying, when we get back to the new norm, let's get a reality check. This may be the new norm at least for a while. So I would stop waiting for the new norm and saying, this is the new norm until further notice. And build your PET throughout the organization accordingly. And the second set of initials here, same thing, but build a process to measure and measure the process. So management and measurement coming together. Do we have processes that we can manage? Do we have processes that we can measure? That's what keeps us out there, out of the weeds. Management by measurement. And so if there's no measurement, and it's absolutely amazing, I still go into so many companies and talk with so many companies that, they're measuring, but they're measuring to measure. That's my MT. You don't need to do that. You don't need to go measure everything. All right? We don't have to know whatever time the CEO went to the bathroom. We don't need to know what time the janitor came and turned the lights off. Okay, well, let's get out there and measure, make sure we're measuring the critical things. But if there is no measurement, then it is all hearsay. Data-free conversations and decisions will cause lots of frustration, cost lots of money, and result in lots of disappointment. If you're out there adjusting your usages and lead times, your customer experience policies, your profitability, without this discussion, without this data, you're going to be very disappointed in the next 3, 6, 9, 12 months. You are not going to get the results that you're hoping for. So let's bring home what we're measuring, just to confirm it. And again, just from the inventory standpoint here, fill rate. How is your fill rate? If it's slipping, your customers know it's slipping and they're looking for an alternate source. Watch your fill rates. Watch your on-time delivery. Watch the accuracy. I've got companies that have gone out and they've brought in a bunch of temp help because their employees are getting so much unemployment they don't want to come back to work. And all of a sudden the order accuracy has failed them. All right? Be careful how you're approaching the world. Your customers, just like you do, still want that perfect order. And again, watch the freight, the turns, how much inventory you invest in. I'm sitting here and saying invest in inventory, but I'm also saying don't invest in the things that you don't need. Don't invest in non-mission critical. Don't invest in things that you know is not going to have an interruption. And start getting rid of the stuff that you don't need. Find a home for it and watch the transactional cost, or you guys will be cutting POs and transfers all over the country, and it will eat you up. We've got to do the lowest total cost. So let's bring this home. I know Gloria's over there sweating on me right now. She goes, Grant, that's longer than 30 minutes. I'm almost there, Gloria. The new norm. Everyone's going, when's the new normal coming? When? And what will it be? We don't know when it's going to be. We don't know what it's going to be. We're starting to have a feeling this is the new norm for a while. Now it's going to stabilize. We're going to get better at it. I mean, my gosh, all of us 3 months ago thought about wearing a mask, and we're like, are you kidding? Today, if you're not wearing a mask, are you kidding? Things will change out of necessity. But we're getting ready right now. Whether this is the new norm or it's still getting in place, you don't need to wait and say, oh, here it comes. We'll start getting ready. Right now, what we're doing is getting ready for it, top to bottom, end to end within your organization. So now more than ever, It's important that inventory and its management has a strong top-down strategic approach. This can't be just within your purchasing walls what to do with this, as well as a solid bottom-up tactical approach. We can't then, once management tells us what to do, go in and keep manually trying to do this. We've got to go in from a tactical standpoint, use our processes, use our education, and use our tools to implement the strategic approach for today's world. Now more than ever, it's critical that your company understands how your inventory management program works. I still get with companies and they're changing lead times when they should be changing order cycles. They're manipulating usages and it should have been the EOQ. You have to understand how it works. It's no different than a car. There's a steering wheel. There's a shifter. There's a blinker. There's a gas pedal. There's a brake. There's levers and dials that do certain things. Understand the levers and dials of how your inventory management system works so that the strategic and tactical changes we want to put in place are the right ones. They don't need to be guesses. So your company understands how it works and what adjustments need to be made to meet both the strategic and tactical objectives going forward. And of course, now more than ever, it's essential that your company and inventory team understand how to make smart, specific changes rather than broad, quick fixes. I had at the beginning a number of companies, hey, we're down 30%. That was their top line. So they wanted to go drop usage across the board down 30%. I said, did you do any analytics? Well, no, but our top line's down 30%, Grant. I get them to stop, run it by vendor, and all of a sudden they're going, oh, we've got some stuff that's down 60%, and we've got some stuff that's up 30%. I guess they broad 30% down on usage across the board wasn't the right answer. Learn how to do smart, specific changes rather than these broad sweeps that we like to do. So, strategic, just bringing it home, a safe and smart approach, safety policies. Safety, always be aware. Company objectives are going to change short-term and long-term, profitability, longevity, growth, and particularly today, you're going to see responsibility. Don't be surprised. You go off to Europe, there's a responsibility dashboard that your customers ask companies for and go, what's your social responsibility like? What's your economic, and they're out there, what's your carbon footprint? And this is part of their decision, who they're going to buy to. Don't be very surprised if you start seeing your customers asking for your responsibility dashboard, mission statement, revenue and profit preservation, growth and optimization, employee safety, customer usage shift, supplier supply chain shift, and relationship still counts and is more important than ever with all of them. And again, this is strategic. I'm going to have it on the next slide, but it's important enough. We learned this back in previous times, and this one even more so. Start looking for alternate sources for mission-critical products. Don't get caught by surprise. If you're an importer, take a look at what's it's being imported from where. There's many of this that can be done domestic. I'm not giving a kick import versus domestic. I'm giving a kick for, do you have the product when your customers need it, and can you get it? Tactical, the systematic, proactive approach. Grant Howard. Review and adjust objectives and measurement. That's at the top of everything, from the strategic down now to each of your departments. How are we adjusting the warehouse? How are we adjusting sales? How are we adjusting replenishment? What are their objectives? And let's make sure we're measuring it. Review your stocking list. There are some things that you shouldn't be stocking anymore today. It's not mission critical. It shouldn't be on the shelf. There are other things you're not stocking that have become more mission critical. There are things that you've had orders needed that you should be stocking now. So again, review your stocking list both ways, for things that you should be stocking that you're not, and things that you're stocking that you no longer need to. You got to adjust the usage at the product and item level, not at the broad sweep 30% down on all usage across the company. You got to extend the lead time to realistic, normal worst case. 7/7/21, 7/7/21, 21 days is their lead time, not the average of 7/7/21. Increase the safety for fluctuations in usage and lead time, and what service you want to give. Increase the order quantities if possible, because we know most likely in the next, it's already happening, but the shortages today are going to become even more so as we go into more unknown. Negotiate lower targets, combining POs, one target, establish alternate sources, utilize surplus. This is a great company I worked with last week. It was absolutely amazing. What had been surplus for them for years, and now they can't get the newest cutting edge. It's already in shortage. They can't get it. This happens to be an irrigation distributor out putting in irrigation systems for golf courses. You go, wow, it's surprising what's up and what's down. Remember, irrigation was classified essential for most in landscaping, so they've been humming right along. One particular company I work with a number of them, but one particular, they're up. They're an irrigation house, and they're up on sales year to date versus last year. But one of the things, they can't get some product, and all of a sudden, some of these heads, that's what these sprayers that they have, which were obsolete and surplus, customers are willing to take because there's nothing else available. So there's new homes for surplus. If you can't get it to your customers, find a home. Do a trade with your vendor. Find somewhere to get rid of it. Try to get those dollars freed up so you have it available for things you really need. And, of course, implement a solid PET program around these changes. Number 1, objectives and measurement. Number 10, the PET, process, education, and technology to go and meet those objectives. 2 through 9 are the things in the inventory world that you've got to get out and take a look at, and not once a year anymore, not once every 6 months, monthly, weekly, some companies daily, looking for shifts and updating their system accordingly. So just to bring it home, 4 areas that we've talked about today from a big picture. Management has to be engaged. Management has to give the vision, has to give the clarity, has to give the direction. And even more so in today's world, more than ever before, our companies, our employees, our people, our customers want to know that there's a clear vision, that your company has the right direction, and it's a long-term approach. Balanced objectives, profitability, longevity, and growth, and more than ever, responsibility is going to come into your world and be looked at by your customers, your suppliers, your employees. Execution excellence. That's how we bring in inventory, how we warehouse inventory, how we pick it, how we sell it, beginning to end. Do we have execution excellence, which in the past has always been accuracy, consistency, and efficiency across the line? Safety is now part of that world. And we're not talking about a pallet dropping on them, folks. Everyone knows the safety we're talking about today. And, of course, smart measurement, good performance. We're measuring improvement. We're measuring opportunities. There's going to be a tremendous amount of opportunities. I like to share this all the time. If you look back to our Great Depression of the 1929 through 39, some of our largest companies today were started during the Great Depression. All right? We all think of high unemployment, everything shut down, this and that. No. There was tremendous amount of opportunities, and many of the companies that we work with today were established during the Great Recession because of need, because of companies that did foolish things and put themselves out of business, not the Depression, and it opened up the door for someone else. Data-driven measurement will show you these opportunities, these improvement places, and where we need to go out and drive different performance. There we go, Gloria. I know I went a little longer than planned. I apologize.
No worries, Grant. Listen, due to time and the amount of time that we have the platform, pardon me, I want to let everybody know who has posted a question that those will populate according to name, along with your email address. Grant can follow up with you directly. But the one question that I wanted to get out there before we conclude real quickly, Grant, is the question that came up over and over and over again. Is it says, when is your inventory management conference scheduled for?
Oh, geez, here's what went on with this one, everyone. As a lot of you know, we've had a lot of emails on it. Our 3-day best practices inventory session was scheduled for mid-May, a month ago. And, of course, that got first postponed. We thought we were going to do it in June. We were all in the same boat. Oh, we're on a 30-day ride here. That came, and we realized June wasn't going to happen. We then rescheduled it with the hotel, and I don't remember exactly. I believe it was in October. Well, now even that we have shifted off of. It's not going to be there. We're not even going to. People aren't going to be ready to travel. So here's our plan. It's a moving target. Our plan at this point, because we don't know the unknown as well, is we want to put together some type of remote webinar series like this. It won't be the full 3 days, most likely, everyone, but something to keep people going. There'll be some of, an update of what we're doing today, where we're at in the fall time. So a remote session in the fall, we've realized it's over. Grant, even today, Grant go for 30 minutes and I go for 55 minutes. Again, I like to hear myself talk, but the point being out of that, it's normally 3 days, and to get you guys in front of a computer for 3 days straight, so we're trying to work through what's our best approach there. It's probably going to be spread out 2 days a week. At least this is our thoughts right now, and anyone can send emails. So if you got comments on this, send it as Gloria has a question, and then she's going to forward it to me. Our thoughts right now are probably a couple times a week in the afternoon, 3 weeks in a row. Tuesday, Thursdays, 4 hours a day for 3 weeks, and do similar to our 3-day conference. And then the hope is in May, because we're already scheduled with the same hotel, next May 2021, we'll be back on track. All right, Gloria. And again,
Grant,
everyone, if there's some loaded questions there, I know there's probably a lot. Gloria, we got to let the line go. Is that correct?
Yeah, we have the platform for an hour, but we want to thank you so much. We had a tremendous audience online today. We had 182 people on out of the 250 that were registered. So Grant, from the bottom of every Tugger's heart, we want to say thank you, and we look forward to the next time. So as they say in Hollywood, that's a wrap, and everyone have a great day.
Thank you.
Bye now. Whew.